I'm Stephanie Link. I'm co-portfolio manager of Action Alerts Plus. Here with me is Jim Cramer. And we want to talk to you about some healthcare names today. Jim, let's talk about Abbott and Glaxo. Glaxo's a new position. Right. Abbott we've been adding to.
Abbott is sainted. Finally, we've known that Abbott was one of the best run pharma with double digit, and no one believed. And then this was the breakout quarter.
Which is unusual for them.
Right.
Normally, we buy on weakness. We have that in our minds that it just normally trades off.
We were talking about that it would be weak this morning. I mean, obviously this is not just a product that talks about trying to nail a certain thing, but yes, we were hoping Abbott would be down, and you know what? It's okay on a down day to have a nice stock.
Absolutely, and I think that two positive call-outs: emerging markets.
Right.
40% of their total sales going to 50% over the next several years. And the growth from emerging markets was very, very impressive. Nutrition. And they have so many new products and margin expansion. So that, I think, goes a lot higher.
Yeah, and what people have to recognize is, I know, and we've had these fights behind the scenes, these stocks all seem expensive.
Yeah.
Okay, versus, say, Caterpillar, versus Timken, versus Valet, okay, versus, CBI. They're not if rates don't go up, and they're not if there's no inflation, because what's happened is what eats into the out years. I mean, what do you think Abbott can earn in 2016?
Oh, I mean, their earnings power is substantially higher.
So the only reason that would be blunted is if you felt there was going to be massive inflation.
That's right.
Now, that had been the theory about why people felt the Fed had to stop.
Yes,
it's just not right.
And it's just Miles White, the CEO. I mean, there really couldn't be a better CEO. He's just so consistent, and they're going to take another 300 basis points in operating margin, and they're going to actually expand this year. So I don't know if there are that many pharma companies that are going to see that kind of expansion.
Perhaps Glaxo.
Maybe Glaxo, and that's what. Let's talk about that a little bit.
I mean, Glaxo to me is a rarity. You've got huge pipe of approvals coming, and also big yield. I mean, because look, you got to have AstraZeneca. Giant yield, not enough pipe that I can tell I'm doing more work on that. Or you can have giant pipe, but not a lot of yield. That's Allergan. Mm-hmm. And I like the yield. I like that.
And we were talking about which one to add. So the interesting thing about the pipeline of Glaxo, they could all be blockbusters.
I know. These are needle movers. Merck, we love Merck.
Yes.
Merck's got singles, lots of different ones, multiple, double-digit number, but Glaxo it had been down for a long time because of lawsuits, because of a problem with one of their drugs, and I believe that it's probably 3/4 of the way behind them. I don't want to say all, because one thing we know, when you have a drug company that does something wrong, there's always someone who's going to sue you.
Right. That's
it's like a bank.
But these have very good balance sheets, good yields, and we'll continue to keep adding for the portfolio.
Right. I just want to point out to people at home who are watching this video. Look, we're conscious that this is not the moment for Timken. Okay, we're conscious. We know that Chicago Bridge and Iron, it's not the moment with oil going down. Conoco different because it's got the good yield. And we're going to dodge bullets like we did with National Oil Varco, where we sold it, and on the conference call, the Chairman's Club, I urge people to look at it. We said basically, listen, this one's wrong. Mm-hmm. NOV was wrong because oil comes down a lot. CBI is not like that. Timken's got other things, other catalysts. But we're incredibly conscious that this market likes Glaxo, and we're going to give them Glaxo.
Right.
But we can't just cashier 3 other stocks because we know they're going to go down right now. And we'll never get back in.
And we talk about diversification all the time. So what we're trying to find are really high-quality companies. Whether it's a Timken, it's a high-quality company. It's just out of favor at this point.
Look, hedge fund, hedge fund, you lever up J&J, lever up Coca-Cola, PepsiCo. That's not what you do here, because you can't trade in and out. You're trying to generate long-term. Do okay, but more importantly, explain. And we're excited. That's why we do the videos. Explain what's going on.
That's right. Great. Thanks, Jim. I'm Stephanie Link.